All right, listen up. The suits on Wall Street, they think they've got the next couple of years completely figured out. Yeah, they've run all their little numbers, built their fancy models, and they've published their official playbook for the future. But what they don't realize is that their entire system, it has a critical vulnerability, a single line of code from the past that's about to absolutely crash their perfect little future.
And here it is, the Goldman Sachs investment outlook for 2026. This right here is the official narrative, coming straight down from the high castles of finance. They're telling all of us where the money is supposed to go. From AI to trade deals, they honestly believe they've accounted for every single variable.
But, when you actually look closer, you can see it. It's a massive blind spot. A huge gaping hole in their logic that their billion-dollar algorithms and their Ivy League analysts, they just completely missed it. And look, this is the kind of mistake that doesn't just lose a little money. It completely rewrites the rules of the entire game.
So what is this fatal flaw? Well, it's a ghost. A ghost from 2021 that they've been desperately trying to pretend doesn't exist. They called it an anomaly, a one-time fluke. But this ghost, it's still haunting the machine, and it is the key, the only key to understanding what really comes next. So you're going to want to stick around because we are about to expose it. Okay, first, let's step into their world, the official narrative. It's a very clean, very sterile place, built on these big, impressive-sounding numbers. It's all about macro trends, central banks, and geopolitical chess. This is the reality they're trying to sell you. So check this out. They are betting the entire farm on the AI revolution. They're predicting a 175% surge in power demand just from data centers. And why are they so bullish? Well, it's simple, because building all this stuff requires trillions in capital, a game that only they and their corporate buddies can afford to play. It's a future built on a high-tech moat. And of course, they're watching Washington. They've already calculated that tax cuts could pump another $3.4 trillion into the deficit. See, for them, the market is a top-down game. It's dictated by governments and central bankers. That's their world.
They're tracking trade wars down to the decimal point. An 18% effective tariff rate. It's all just so neat, isn't it? So predictable. A world of spreadsheets and policy papers. A world where they think they are in control. But their models, oh man, they're about to get a massive shock to the system.
All right, now for the fun part. Because while the suits were busy staring at their spreadsheets, a glitch appeared in the matrix. A collective of individuals, people they dismissed as dumb money, found a vulnerability. And you know its name: GameStop. So the key here is understanding the weapon they used, the short squeeze. The banana analogy? It's a great start, but let's level up. Imagine a hedge fund shorts a stock. They borrow and sell 100 bananas they don't even own, promising to buy them back later. But then a bunch of apes decide to buy and hodl every single banana in existence. The hedge fund still has to buy back those 100 bananas to close their position. They are a forced buyer. So who sets the price? The apes do. The price is whatever they want it to be. And that, my friends, is how you get a ticket to the moon.
Even the chief twit himself called it out. Elon Musk, a guy who battled shorts for years, called the whole practice a scam. Think about that. When the richest guy in the world is validating the ape's core thesis, you know you're looking at a fundamental weakness in the market's very structure.
And this just shows the damage. This wasn't some little paper cut. In January 2021 alone, short sellers bled over $6 billion. Hedge funds that had been around for decades were literally vaporized in a matter of days. The ghost had teeth. And then the apes evolved. They started learning the system's inner workings, especially the difference between holding your shares with a broker versus direct registration, or DRS. Think of it like this. DRS is taking your shares out of the Wall Street casino and putting them under your own mattress, in your own name. They can't be loaned out. They can't be used by short sellers. It's the ultimate move to lock the float and take away all the ammo from the suits. But here's the thing the suits really, truly do not get. The GME event? That wasn't an isolated bug, no. That was the proof of concept. The glitch became a permanent feature of the market. The contagion of coordinated, decentralized action was efficiently born.
And we saw it happen again in 2023 with Silicon Valley Bank. It was the exact same dynamic, just a different target. The same playbook that brought down hedge funds in 2021 was used to take down a major bank in 2023. A story takes hold online, and fear spreads. Not in days or weeks, but in a matter of hours.
And we have the data to back this up. Researchers actually quantified it. They found a direct correlation between high Twitter exposure and deeper stock market losses for regional banks. So what does that even mean? It means that in today's market, a company's stock price can be just as influenced by its meme velocity as it is by its quarterly earnings. The noise became the signal.
So the bottom line is this. We are now living in the era of the digital bank run. There are no lines around the block anymore. The run happens on your phone, in group chats, on social media feeds, and it moves way faster than any regulator or CEO can possibly react.
So this brings us to the synthesis. This is the ape's X-ray vision. When you stop looking at the market through the suit's outdated lens and you actually see the underlying code, the fatal flaw in their whole playbook becomes ridiculously obvious. So let's go back to that question we opened with, the giant hole in their map. What is the one variable, the one thing their complex models, their AI, their entire worldview cannot account for?
Here it is. The fatal flaw is human beings connected by the internet, right? While the suits are totally focused on sterile macro trends and Fed rate cuts, the apes, they're watching meme velocity. They're tracking social contagion. They're calculating short squeeze potential. The suits think the market is a machine that just prints money for them. The apes know it's a multiplayer video game, and they're hunting for the glitches that lead to the legendary loot and the epic tendies.
So where does all this leave us? Let's bring it all together and figure out what this new reality actually means. Because this isn't just some theory, it's a whole new set of market dynamics.
Okay, so here's the takeaway. 1. The official narrative is fatally flawed because it completely ignores the power and the speed of the decentralized retail crowd. 2. The GME glitch was not a fluke. It's now a permanent market feature. The digital bank run is real. And 3. Social contagion moves faster than any quarterly report or financial model will ever be able to predict. Sentiment is the new fundamentals. And now, of course, the mandatory guardrail. None of this is financial advice, okay? This is educational banter. We're looking at probabilities, we're analyzing data. But you have to always remember, the house has an edge, and the market is and always will be a casino. Do your own damn research.
We are watching this chart like a hawk. If you want to stay ahead of the suits and be the first to know about the next market glitch, smash that subscribe button. While you wait for the next candle, go grab your free gear. Sign up for Public to get $20 in free assets. Check out Webull for that BTC promo, or grab your NVIDIA stock on Moomoo. All the links are in the description. Smash the like, subscribe to the tribe, apes together strong.
So I'm going to leave you with this final thought. The suits were totally blindsided by the GameStop glitch. They were completely caught off guard by the digital bank run. Their models are always fighting the last war. So the real question is, what's the next glitch that they don't see coming? Drop your theory in the comments below. Let's see if we can spot it before they do.